Is there a difference between real estate appraisal versus CMA and income analysis? Could you shed some light there?
Sure. So there's CMA is what a real estate agent would do. So let's say your buyer wanted to write an offer on property, you will do a CMA or comparative market analysis to figure out what the price of that property should be in order to facilitate writing the offer. If you are the seller's agent, then before you list the property, you would do a comparative market analysis to help the seller come up with the right price to list the property. So that's the CMA that the real estate agent will do. That cannot be used to take it to the lender. Let's say somebody wanted to get a mortgage and they cannot provide that to the lender. Lender will require an appraisal. So let's say somebody wanted to basically split property. Let's say husband and wife are splitting. They wanted to get an appraisal. It's not a CMA done by the realtor. It would have to be a proper appraisal that is done by a licensed appraiser. So in many of those cases where it's either the lender, it's, splitting of property, one person buying the other person out, or just getting a value of the property for transfer, whatever the case may be. So in those scenarios, appraisal has to be done by a licensed professional, not by a real estate agent. So we cannot use the appraisal or, assessment that we do, CMA, for those purposes. So that's a different licensing. And the person has to be licensed as a real estate appraiser to be able to do that appraisal. Third one, income analysis. Income analysis, generally a real estate agent would do. So let's say, for example, somebody wants to buy an apartment building, or they want to buy a rental property, fourplex that has 8 units in it. So in these cases, you would have to take a look at, okay, what is the income that the property is generating? And based on that income, does it make sense? Does the price make sense? So you will calculate net operating income. So you will take a look at all the rent, any additional income that's coming out. Then you would subtract the vacancy and bad debt, which is 3 to 5%. And then you get your effective gross income. And from that, you would subtract all the expenses, and that will give you net operating income. So as a residential real estate agent, you may have a triplex, you may have a fourplex that the person wants to buy. So those are under your residential licensing. And now they are becoming very common. So residential real estate agents may be doing a lot of these calculations in the coming years because of these eightplex or, multifamily rules that the cities have implemented. So income analysis basically just gives you a pro forma analysis, which is performance analysis of the financial analysis of the properties. So basically it will tell you, does it make sense to purchase that property? So you will take a look at, okay, what the net operating income is, and based on the value of the property, you can calculate the cap rate, which is basically how much rate of return the person would be getting on their investment by buying this property. So that's known as your income analysis. Also, sometimes we'll call it pro forma analysis, which is basically says performance analysis of the property, which means your financial analysis, which will help you figure out should the person buy it or not. So income analysis can be used by the buyer to decide whether they should write an offer on the property. It can also be used by the seller to see, what price point to list the property at.
Okay, but that is only for income generating properties. But Correct. For a normal property, we would do a CMA.
Absolutely.